25,000. So we ended up about 25,000 yesterday, and we saw a lot of put writing happening at 25,000, which gives confidence to the market going into this weekend. Now, in the previous weekends, we were very uncertain with respect to the kind of Trump tariffs, or there are other geopolitical uncertainty. But this Friday seems to be a little different from a point of view that one, you're going ahead into the next week with the thing that the Fed is going to cut rates. It's going to be 25 basis points a minimum. If it's more than that, the market is going to rejoice. But 25 basis points is coming in. You had yesterday the Senate hearings for the Indian ambassador, where both Marco Rubio and the incoming ambassador spoke about the strategic relationship that they have with India. That sets a tone for the upcoming Quad summit, which is expected in November. Now, we heard earlier that Trump may not come to India for the Quad summit, and that is going to change now. And there is certainty now. There is certain little bit of a certainty now that he may be landing in India for the Quad summit. So that's something which is coming in there. So there's a lot of positive takeaways going into this market as you start the Friday trade.
Oh yeah, absolutely. And looking at the core CPI, the fact that it's risen, it's surely building up hopes, like Sajid said, or at least, it's almost certain now that the Fed will be on track for at least a 25 basis point cut. In fact, a lot of action in the market is also anticipating that maybe it could be higher than that. But 25%, or rather 25 bips, pretty much seems to be par for the course. Just want to quickly flag off what the global market handover as well has been, and heightened expectations from the Fed definitely took the markets higher. It's a solid 600-point handover that you've had from the Dow overnight. The S&P as well managed to eke out a solid 1% gain. And then the Nasdaq, 157 points higher. That continues to look good. And fortunately for us, Asia as well seems to be picking up on the same sentiment. Be it a Hong Kong or a Shanghai, they're both holding out well in the green, although a lot more tempered for Shanghai. But look at the Japanese Nikkei. It's almost closing in on a 300-point gain. So yeah, it's the chip-making stocks which are comforting pretty much both US as well as Far East as well. Talking about our market setup back home, and today would be Infy Day. Finally, that buyback gets announced, and quite a discount, or rather premium, to the CMP.
I think the street would be disappointed with the kind of premium that Infy has given. At 1,800 rupees, it's the discount premium is roughly around 19% to yesterday's close. Though if you counter it that from the day of announcement, it might be slightly higher. But look at from a point of view of the shareholders, Infy's share hasn't moved for the last 3 years, and now it's 18,000 crores, which is one of the highest buybacks for Infy. And if you compare it with other companies, like in March 2022, we had TCS coming out with nearly 18,000 crores of overview. So it's not the largest in that sense. It's almost matching to what TCS did in March 2022. But the fact is that the price is a disappointment. The street was expecting around 1900, 1950 as a price, but it's not coming in. They will be able to buy out roughly around 2.7% of the equity from the market. So what it will do from Infy is, from a more of a fundamental point of view and not from an investor point of view, is that Infy was expected to have a EPS of nearly 66, 67 rupees per share for FY26, and that would mean that now the EPS will be around 70 odd. So they're looking at an EPS growth of nearly 10% in this year, in FY26, and that is something is going to support Infy in FY26, because it's already trading at 21 times or so that maintain that. But look from a retail point of view, and let's do that retail math. If you buy 100 shares of Infosys, you're going to get an acceptance ratio of nearly 5 shares. That means 5 shares will be accepted at 1,800 rupees, and then the 95 shares that you already hold, the residual value for them will be roughly around 1,496 rupees. So basically, there could be a correction in Infy today because of the kind of buyback price which has come in, and also the price will start stabilizing around 1496, 1497. rupees, because based on that calculation. Of course, it's a minimum acceptance ratio of 5% for retail investors, and 15% of this entire 18,000 crores is reserved for retail investors. The acceptance can go up based on what kind of tendering happens, and this is a tendering which is going to happen on the stock exchange platform, and it's applicable to the ADS shareholders. Now, this entire buyback is not going to be immediate. It will need at least three months to come through. That's primarily because it's going to be through a special resolution, and that special resolution would approve this buyback, which is around 30 days. But they also need a US SEC approval, because the tendering rules for shares in India and US are separate, so they need to get an exemption from US SEC. So anyone who is holding an ADS, which is one American Depository share, is equivalent to one Indian equity share. So they will have to convert the ADS into Indian equity for them to tender in the buyback, and that conversion will have to happen before the record date, which is announced by Infosys. So that's something which is it's a matter of calculation which is going to play through, Aisha. So pricing, quantum wise, it's bigger. From a pricing point, I think the street will be disappointed.
Yeah, and I think that disappointment, or rather the excitement on Infy ever since the management announced that they're going to be mulling a buyback, lasted only 2 days. Yes, the stock jumped up quite a fair bit, almost about a 10% in 2 days, but that fizzled out yesterday itself at 1509 thereabouts. But I think the bigger point is what the setup is looking like, because the market per se was looking at IT to be that, knight in shining armor as a sector after the rub-off from Infosys to actually, leapfrog from this range that it's been stuck in. That clearly is not happening now.
I think we are at a stage where most of the funds, foreign and domestic, are at a position where they are holding IT and on an underweight position. So is it going to go down further from here? The answer could be no. It's not going to go down further from here. It could be further based on the earnings that comes in October. And in the October earnings, what's going to happen is Q2 is going to be washed out. What the street will look at is a commentary which is going to come in from both Infosys, TCS, Wipro and other big companies, and that commentary is going to set the stage for the IT companies going forward, because FY26 is a foregone conclusion that is not going to be a growth year for them. It will be a muted growth year for them in that sense. But FY27 is what street is betting on, and and the stars are getting aligned with respect to the kind of geopolitical climate is there, or whether it's a Trump tariff, whether it's any other form of spends which are coming in, discretionary spends coming in, AI-led orders which are coming in. All these are going to help IT companies, into FY27. And so, if the question is whether there's expected to be a rally in IT companies, I think there could be some kind of bounce back, given the kind of expectations and are much better going into the earnings season in October, and there are lesser number of uncertainties which is there for the IT companies. So that's something which is important.
All right, so that's about the IT space. Not much of an excitement when it comes to the Infosys buyback announcement, but yes, of course, all these tech-heavy majors have corrected anywhere between 20 to 30% in the last 1 year, so let's watch out for that. But Sajid, coming to the F&O setup then, because I think a couple of days back we were discussing that how the FII long positions are at a 2-day low. So from that number to now, any such improvement, because the markets are just yesterday, the close was above 25,000.
So the close was about 25,000, primarily because there was a lot of put writing that happened at 25,000, and 25,000 is now emerging as a good support. Is it a big rally? Because I think if you look at the GIFT Nifty, which is now trading about 25,100, I don't think it will expect it to go about 25,100 unless there is a big buying that comes into this. But this Friday is set up in a very better. It's much better Friday than previous Fridays. So while there is a small resistance which comes in at 2500, and this is entirely based on the kind of opening position build up on the Nifty, there is a likelihood that it may breach 100 also, 2500 as well. But as I said, the long positions have risen to nearly 10 9.78%, which is a good sign that there's a bounce back happening. The shorts are getting covered, a lot of puts are getting written there, and a long positions getting built. Especially if you look at Nifty Bank, their open interest positions are coming down because a lot of shorts are getting covered there as well, and long positions are getting built in Nifty Bank as well. So banking shares, yes, there's some positive build-up happening, and especially in the PSB shares, because that's where we have seen some kind of interest. Private sector, we saw some kind of selling coming in, good delivery happening on that, but I think that's going to ebb for now.
And by the way, Infi got that exemption from the US SEC for their buyback, so it's a go-ahead now. But let's find out what's been happening across the globe. What's the global chatter like? And Snehi